In this tutorial video, we are going to learn to prepare the balance sheet and the nitty-gritties of the items in the balance sheet. So we have a list of items. These are typically assets and liabilities in a business, and we are going to pick each item and post them in the balance sheet. So we have capital, office furniture. So most of these items you have seen this before in the previous videos. The only new thing possibly is loan to ABC Limited. So let's say the company you are dealing with is XYZ Limited. This company is giving a loan to another company. So this becomes an investment for XYZ Limited. That's the one new thing that you have, and all the rest of the things are, same as what we have seen before. All right, so let's move forward. I have the format of the balance sheet with me. I'm just going to write the headings: non-current assets and current assets. Then I have equity capital, I have non-current liabilities, and I have current liabilities. So this, if you draw this format in the beginning, it's good, but sometimes you have more items and you don't have enough space, so you may want to be careful about that. So capital is 47,000, so we bring share capital here. Share capital 47,000. Office building is 55,000. This goes to non-current assets. Office building 55,000. We have furniture 2,500, 2,500. Bills receivable are current assets 7,000. Bills receivables 7,000. And bills payable, the opposite of that is current liability 2,500. So 2,500 are your bills payable. Debtors are 20,000, current asset. So debtors under current assets 20,000. Creditors are current liability 15,800. These are creditors. Then you have machinery 4,500. This is a non-current asset. Machinery 4,500. Then you have loan that you gave to ABC Limited 5,000. This is an investment. So loan to ABC 5,000. Now depending upon the duration of the loan, is the loan duration 1 year? If it is 1 year or less, then you can show it as a current asset. But we are assuming here that this is a long-term loan which has been given to another company. There is an investment 3,000. Again, unless specified, we typically assume this is a long-term investment. So investment is 3,000. Cash and bank are 200 and 500 respectively. 200, 500. This is cash balance. This is bank balance. Net profit during the year is 38,900. So I'm going to write 38,900 here and say reserves and surplus. Reserves and surplus. Again, in the textbooks, people may add these two and then show the final amount here, but that's typically the partnership business or other sole trading business. In company form, the accumulated profit from all the previous years is shown in a head called reserves and surpluses. And finally, you have closing stock. Closing stock is the unsold stock. Unsold stock is an asset, current asset, a current asset. You expect to convert this into cash in next 1 year. So closing stock is 7,000 and you show this here. This is stock. Done, that's it. You have brought all the items to the balance sheet. So all you need to do now is to total the two sides and see if they are equal. When you do the total, you will see that the total comes out to be 104700 on both the sides. That's how you prepare a balance sheet. So to summarize, in this tutorial, we looked at a bunch of items, assets and liabilities, and we prepared balance sheet. The idea is to reinforce the learning that you've had about the balance sheet before. And we are using the account format. You have assets on one side, liabilities on one side. The way the companies disclose, actually publish their final accounts, can be in statement format where assets can be written at the top and followed by liabilities. Again, various things can be clubbed. Typically, you see all the non-current assets written, in one line, and then you have a note where you can go to see more details about those assets, what has been the depreciation charged, and so on. So the idea here was that you get a sense of how to bring items from either a trial balance or a list of items and prepare the balance sheet. Alright, let's stop here. I'll see you in the next video.